Good afternoon. Today I'm going to discuss Raghuram Rajan's exit, Brexit, and lastly on the Fed monetary policy which was announced in the last week. So the latest information that we have in hand is that Dr. Raghuram Rajan will not be extending his term. So he's due to get retired on the 4th of September 2016. There were a lot of concerns over the weekend that it can have a significant adverse impact on equity, bonds, as well as currency. Today we got, what we noticed is that equity markets were pretty stable. So that basically indicates that equity market is of the opinion that Dr. Rajan's replacement will be equally strong, and government will make sure that good work continues by their own policies as well as the new hiring that happens at RBI. In terms of currency, we have seen some bit of weakness. Rupee has weakened by about 40 paisa, but again there was intervention by the RBI which has more or less stabilized the dollar rupee at about 67.40. In terms of bonds, there was absolutely no reaction. Things remained pretty stable. So all in all, it looks like all the asset classes took Dr. Rajan's exit pretty strongly, and so this is one adverse news which is out of the way, and going ahead the focus now shifts to Brexit. On the Brexit, the last information that we have in hand is that all in all referendum is shifting towards stay and not exit. So that is the reason. That is one of the reasons that markets have responded positively and not reacted so negatively to the governor's exit. If that happens, that should result in some bit of currency appreciation from the current levels, as well as some more upside on the equity front. And all in all, that will bring in a lot of global stability, because most of the central bankers as well as IMF and World Bank have highlighted Brexit as a big concern from the European Union's point of view, from Britain's point of view, as well as overall negative sentiments that it can bring across the asset classes. Lastly, on the last Fed policy, there was not much change in the statement. It was largely in the expected line. However, it looks like there is some more time left before a Fed rate hike happens. As always, Yellen continued to highlight that further policy movement is contingent on the data flow, but it looks like it could take some more time for them to actually move on the interest rate front. So we would expect a Fed rate hike sometime going in September. July looks unlikely at the moment, so the next expectation is only after September, and this is of course assuming that data remains stable or improves from the current levels. So yeah, so that's about it from my side. Thank you.